Hi everybody, and welcome to the Monday Market Review, being held by yours truly, Ian Giffen, on behalf of GoPro Trading Academy. I know you guys are watching this faithfully every week, so if you're getting value out of it, I'd really appreciate it if you drop the word value into the comments below. Remember, if you've got any questions for me, then you're welcome also just to ask those. I will answer each one personally, and even if you're watching this as a recording, remember that I do come back to all of the questions you ask and answer each and every one. Also, if you like this video, please don't forget to hit that like button. And if you're not already a subscriber of our channel, then feel free to subscribe and hit that notifications bell, because we do bring out valuable professional training every week for you to help you to become successful as a trader. All right, so let's jump into what happened last week. Well, first of all, it was a pretty good week, I think, for those of us who trade the GoPro strategies, most of which look for high quality price movements. We got plenty of that, particularly on our yen crosses, but there were a couple of other opportunities as well. If you did get any of these trades, as I do go through them, please will you own up to it and drop that into the comments below as well. Really nice to know which of you guys is getting these winning trades. I know they're not all winners, but at the end of the day, we do make money from our trading through those winners. So good to celebrate the fact. Don't forget to let me know which of those trades you actually got. All right, so the theme, as I say, of the week was generally good price movement with that yen weakness. Canadian dollar still showing some strength, and a few other pairs motoring a little bit, but let's go through each instrument in turn, starting as always with the Euro USD. And you can see here on the weekly time frame, we're still very much outside of the channel, even though we haven't got a valid M pattern. But clearly we are well outside of the channel. Nice established bearish impulse wave. But having said that, we can see the quality of this wave really kind of run out of steam in the last couple of weeks. With last week's candle being a bullish low test. So looking like this on the daily time frame, and it's worth noting that that bearish cyclicity came to an end. So if you're a dual time frame analyst, then you will treat this trend as over, and therefore also that wave. Importantly, we also got it followed by a bullish impulse wave, and really that puts us out of our bearish or usable bearish class M patterns. This is at best going to be a class 4, and remember, because we also got a lower low over here, you could even call it a class 5 M pattern. So not really something that we can actually use for a setup at this stage, but let's keep our eyes on it and keep going with that. Right now though, I would not go for it. So I know there were a couple of questions on that one in our mentoring group. Well, there you have it. That's the answer, certainly from my point of view. Right, the cable, looking firstly at weekly, not much change there. We just did get that bullish impulse candle here on the weekly time frame and putting us firmly back inside of that channel. Remember with the breakouts that until we do get a breakdown in cyclicity, technically it's still a trend, even though it's not really usable for us. And looking like this on the daily time frame, also not usable. And last week though, we did have that bullish impulse wave there, but as we neither have a valid W pattern, class 1 W pattern, nor do we have a breakout of our channel, we're not trading this pair at all at the moment. And you will remember that that's one of the key skills as a trader is not so much picking good conditions, but avoiding bad ones. Right, so just quickly on the weekly, first on dollar yen. Here you can see that yen weakness for the first time, very solid breakout. So if you're a channel trader, I mean, we did have this the week before, then last week was a nice party for you. So we obviously didn't really get an opportunity to use the daily time frame as execution. But if you do drop down to H4, for those of you impulse traders, there was plenty of opportunity here. And I think many folks have actually gotten into an early trade again today. So until this comes to an end, we're going to treat it as intact. So you just keep on going with that. Right, so we'll come back to some of those other yen crosses in a minute. Dollar Swiss, again, looking first at weekly, we have pulled back decidedly into the channel. Not only that, but the close was inside the previous wave's price territory, meaning that this can no longer, if and when it turns around, be a class 1W pattern. So it really disqualifies itself from that point of view. And on the daily time frame, represented by the test of the support level here on the channel. Nothing else for us to look at there. Well, potentially, I suppose you could argue that as long as the market keeps coming down through the course of today, and we don't get a close inside that previous wave's price territory, it's a potential class 1M pattern, and that is true. But it's only usable, of course, when this bullish wave does come to an end. So let's have a look out for what happens there. Dollar CAD, and as I mentioned before, this is something that we saw continue to a certain extent through the course of last week, was this the Canadian dollar strength, meaning that this pair is still coming down on the weekly time frame. Bearish impulse candle, looking like that on daily, and there certainly were a couple of trades that one could have taken over here. It looks like that's run out of steam. Now that may just be a temporary retracement, but the cyclicity has broken down here on the H4 time frame. So yeah, let's see what happens there. We also did get a nice overlay, so this was quite a nice paying pair for us last week, and also helping us to not be too correlated to those yen pairs. Right, on Aussie, quickly on weekly, deep inside the channel, no valid patterns inside that LPO as well. But on the daily time frame, we did get a brief breakout from the HTC channel, which certainly pulled me into a potential trade here on the H4 impulse. Didn't work out. We got stopped out of that one. But this morning, I know that we did actually get a valid setup to go short on this for an overlay, and that's already hit its take profit. So that really made up for it. And on the Kiwi, I know we haven't had anything happening here. Also, if you look at a weekly, very much inside of the channel, nothing doing here on daily. So in the channel, and we don't have a valid pattern. So we haven't been able to use that one for a while. Right, Euro Yen, here on weekly. Yes, we are inside of the channel, but look at that very strong bullish impulse candle on weekly, which if I just go to the right time frame here on daily, meant that we got a great breakout. We actually spoke about this exactly a week ago, and we made the most of that. So as we always say, we keep our powder dry for times like this, and we got a nice bullish H4 impulse there. It was a bit frustrating in the earlier part of the week because we really just didn't get any gap at all on Monday, I think. But certainly when we got to this point in time, perfect little setup. Took a while to get going, trailed our stop, but it got to that take profit quite comfortably before going even further. And of course, there is potential to keep going with this, as you can see. Now, Mondays being Mondays, most of the time, not much has happened today, but we certainly have the potential to go again with this instrument. So that yen weakness still showing itself on many of these pairs. Right, so on the Twisted Sister, got the breakout in the end at long last on this instrument. So there we have it, last week's strong bullish impulse candle breaking us out of that HTC channel on the weekly. But we had the breakout a lot sooner, obviously on the daily time frame, and we traded this one as well. So that worked pretty nicely. We got two solid winners there. The first one hitting take profit just before giving us another setup, which went on to hit take profit comfortably on Friday. So another one where we may well be getting another setup. Remember, depends on how conservative you are, because it looks like we are getting the establishment of some bearish cyclicity on this lower time frame. You might need to wait for that class 1 or class 2 pattern, but if you're more aggressive, you'll go for a class 3W. All right, so I think the yen pairs all pretty much tell a very similar story. Just looking briefly at weekly, you can see here on Swiss yen, going from a bearish breakout to a bullish breakout from that HTC channel, but that's the way it goes. We are outside and have been for some time on the daily time frame with perfect valid class 1W patterns here, giving us plenty of trading opportunity. And certainly on our execution time frame, you can see how that panned out. I think this last trade just didn't actually make it to take profit, which means that those of you who are in it will be at break even and waiting to see what happens there. All right, so that's that. Cad Yen, same kind of picture, similar on weekly as well, and gave quite a few trading opportunities likewise. This one slightly trickier. We had an entry here which just got stopped out at just under break even, basically. So it was almost a break even trade. A bit frustrating when that happens, because immediately after that the market did take off. But we did get another entry almost immediately after that. So and that worked out fine. And with these reward to risk ratios, we really don't mind having those losers. The most important thing is to make sure we don't miss the winners. Another one here on Aussie, and of course we are still very much inside of that wider HTC channel, and we don't have a valid W pattern. But again, on daily, we've been way outside of our channel for quite some time. And although this didn't give us a valid W pattern, for those of you channel traders, you've been trading this one too. For those who aren't, it's probably just as well, because you can't take all of these yen trades with that correlation. Anyone who did trade this pair and used advanced targeting ended up pulling a bit more profit out of the market, and that's what you need to do, because you miss out on profits when the market's not moving quite as well as this. And depending on if you were using 3-6 or the aggressive trading stop, regardless, you would have done pretty well out of it. So both of these trades being nice winners and another potential setup for the week. Nothing's changed. Just remember, if we have a breakdown of cyclicity on the lower time frame, if you're a dual time frame analyst, you will treat that as the end of that wave. All right, so here we are on the last of our yen crosses. Kiwi Yen also giving us that breakout. No valid W pattern. I don't think there is much of that on the weekly time frame, but also we had plenty of trading opportunity on this one last week. Had some good ones. So we did also have a bearish overlay over here, which got stopped out just in time to give us an entry for the corresponding H4 impulse. And again, if you used advanced targeting, you would have taken a lot more home and only actually exited that trade in the early hours of this morning. All right. Moving on to our Euro crosses. Euro GBP has given us a breakout on daily. There's still, we do have that breakout on weekly as well. So we still need to wait for a pullback if you want to trade this on the daily impulse. Remember, though, that your entry does need to be outside of that higher time frame selection channel if you are a channel trader. But here on daily, we've had a valid impact through the course of last week. This one also caused a little bit of frustration, stopping us out of a trade by a few pips before bowling over and diving towards the take profit. So that's all well and good, giving us a pullback at the moment. Still potential to go short on this one. And if you get that bearish setup, don't hesitate. It's looking better than it has done for quite some time. Euro Swiss, though, nothing doing here, looking on both the higher and lower selection timeframes. We did get a breakout here, that is true, but it's pulling straight back inside of the channel. Not only that, it wasn't even an impulse candle, and I have to say that a lot of what I'm saying here is really about, because this is my least favorite trading pair, and I'd rather look elsewhere. All right. Euro Cad being an example, and here we have a much neater breakout, as we discussed already last week, and dropping to the time frame here on the daily time frame for execution. Those of you who trade daily impulse could have taken a bearish one over here. We did have a bearish engulfing candle, and that was certainly a setup for those folks who are looking to trade that. At the moment, Monday just doing what Monday does. So let's wait and see what happens there. But this is still technically in a bearish impulse wave. So if it rolls over at any point in time, we may well get more trading opportunities with this one. Last week, we had a bit of a mix and match over here with that pullback. I think we ended up getting a couple of close to break-even trades, but the overlay did its job for us there. Okay, so not much else, I think, on the Euro crosses. As you can see here on Euro Aussie on the weekly, deep inside the channel, no valid pattern, but that Aussie strength was visible on the daily time frame if you're using this for selection, and dropping down to execution. There were a couple of opportunities. This was another frustrating one where we got stopped out. Well, we almost hit take profit on this, ended up just getting stopped out at break even, rolling over, giving us another entry. would have hit that take profit, coming back again, and also now basically stopping us out for another break-even trade. So it didn't cost us anything to trade this. What we should have got, I think, today already, we would have probably got an overlay, and that certainly with this bullish move in the last 8 hours or so would have hit take profit there. So for those of you trading overlays, that's the most profitable move we've had on that pair the whole of last week and this week. Euro NZD breakout again, this bearish resumption. We'd spoken about the fact that we had an outside close here, even if it was marginal. Now remember, this is still, in terms of speaking this as a technical trend, it is technically a trend, but it's actually starting to show some strength now with that bearish impulse wave. So let's see what happens with the next pullback. Regardless, though, on daily time frame, if you're using this for selection, that bearish movement we saw through Thursday and into Friday gave us a breakout. No valid M pattern here, but you might have looked to trade this as a channel trader on Friday. I don't know if it did actually give any valid setups. No valid pullbacks, and remember, that's something that's quite important for us. Now we are seeing a valid pullback at the moment. Not sure if that's going to make any difference, but certainly this is something that you should keep your eye on for both bearish impulse trades on H4 as well as bullish overlays. Right, moving on to our GBP crosses. GBP Swiss, quite frankly, I haven't even bothered updating the analysis on this because there's absolutely nothing there for us at all. GBP Cad on weekly, that strong bearish wave with 3 impulse candles in a row that we discussed a week ago came to an end with a bit of a spinning top on Friday, last week's candle, I should say. And it looks like this on the daily time frame. Also pulled us into a couple of trades. I think we spoke about one that we were in a week ago that got stopped out also for a marginal loss. But then we got a nice winning overlay to compensate for that. So between the two of those trades, we actually made some money, but we haven't done anything on this since then. That is a real breakdown in sequentiality of cyclicity there. So we're treating that bearish phase 1 as over. So just waiting to see what happens. Right, GBP Aussie on weekly, inside the channel, no valid patterns, not interested. But we do know that a week ago, again, we had that breakout. Didn't go very far. I think for those folks who were channel traders, this was a valid M pattern. That's right. The analysis has been updated now. We did have that valid M pattern trade, which I think we got into, what was that, on Monday? Yeah, that was Monday. Nice setup here. Reward to risk, not as good as what we like. Hit take profit comfortably, followed immediately by another setup, which didn't work out. So here's an example of a strategy where you have a 50% success ratio, but you walk away with a decent amount of money. All right, so that didn't give us a setup for an overlay. Just didn't work out that way, mainly because we've got a phase 1 sort of stacking up over there. In any case, as you can see over here, if we get a higher close here, it'll be the phase 1 followed by phase 1, an aggressive reversal. So the last of our GBP crosses, GBP NZD, nothing doing on weekly. And even on daily, stuck inside the channel, no valid patterns. So I haven't touched that one for a while. Okay, so moving on to our other more exotic crosses, not that they're really exotic. Cad Swiss, the Swiss franc showing a bit of weakness, maybe it's just more the Canadian dollar strength here on the weekly time frame by giving us yet another bullish impulse candle on weekly. But despite the fact that we are inside the channel and there's no valid W pattern, we can have a look at the lower time frame for execution, which of course we did. And that is still, as we speak, in a trend, but worth pointing out that if this high gets ringed, that means we have a phase 2 followed by phase 2, which means that this bullish trend is over. So the trades that we got last week, however, also another one where we experienced a bit of frustration, I guess, but our bullish, I think this was maybe more of a hybrid, got stopped out also marginally under break even, but almost at the same time as giving us a solid winner on a bearish overlay. So those two trades ended up being profitable. And then definitely a hybrid over here, no question about this one, where you would still be in the trade. So let's wait and see what happens there. But if you are in that, it's a perfectly good trade and you would be in a risk-free position already. It's the nicest place to be. Okay, Aussie Swiss. On weekly, you can see we've got that bullish impulse candle last week, turning this into a bullish impulse wave as well, which translates into the daily time frame, having solidified that bullish breakout outside of the channel, getting above that preceding resistance level as well. So we did have an intra-week pullback. So that was something I think that we just dropped down to our execution time frame. That gave the folks who like the hybrids an opportunity to go long, and that trade likewise would not yet have been stopped out. And if it is, it will be at break even. We did get that followed immediately by a bullish impulse, but that has now actually that might have stopped out this morning, or even this morning for either a very small loss or even at break even. So that really has petered out. If we get a bearish impulse candle at the close of this candle, looks like that would be a bearish overlay. So that might end up scoring some bucks for us to compensate us for not making anything on those bullish trades. Right, Aussie Cad, again on weekly, we discussed last week, obviously, the fact that this support level was being tested. Well, it didn't break through. So last week's bullish candle showing that. It was also bullish engulfing, so we've treated it as the end of that bearish wave. And likewise, if you look at this really crappy price movement on the lower time frame on daily, you'll see that cyclicity has decidedly come to an end, and really there's almost nothing happening here. So not interested in anything further there. Right, Aussie NZD, a little bit more exciting last week, where that very strong retracement wave came up, tested the support, well, it was support, now resistance level, which is the lower boundary of our HTC channel. It's nice when you see these levels being respected so well. And then obviously on the daily time frame, very strong reversal. At the moment, all we can say that this bullish trend is in fact still intact. Doesn't look like it's going to make the distance though, but we never know. The weakness having crept in with Friday's close inside of that HTC channel. And likewise, turning it at best into a class 2W pattern when this bearish wave comes to an end. But who knows? This might carry on going, and we might get phase one followed by phase one, which equally would mean that we are potentially back into a bearish phase one here on the weekly time frame. Remember, that trend is still very much intact. Right, last two of our currency pairs. Kiwi Swiss really not having done much for us now. I know that we did see this bullish movement through the course of last week, but there is no valid W pattern here for the bulls, and we are very much inside of the channel. Having said that, the Canadian dollar is slightly different, not so much here on weekly time frame when we are very much inside of the channel still, but on daily, where we were trading this, we had a solid end to that bearish trend. It came to an abrupt halt in the early part of last week. So I think we got into a what was that? Okay, so I think we'd hit our previous take profit. The first thing we got here was a bullish overlay. This one didn't actually work out. It was a very small loser, and then the market just immediately rolled back up again after that. So we didn't actually get any further trades. So not much action there at all. And that's our currency pairs. So having looked at all of that, as you know, I like to just keep an eye on what gold is doing. That's almost like a big picture instrument. So here on weekly, last week was just a high test, which shows that we got some, at the latter part of last week, we got some US dollar strength coming back into the market. But remember, overall here on the daily time frame, we did have that bullish breakout. We are still seeing resistance respected. Even if, or being broken, I beg your pardon, even if the support level is not being respected. So let's wait and see. Weakness, nothing really to write home about. And more action, I guess, on the stock markets here with the Dow giving us that bullish impulse candle coming up to test the previous resistance level. Now, in the short term, obviously, because if we look at the daily time frame, this is looking pretty bullish. But it would need to make a solid break above that resistance level to really mean much. And again, it all really comes down to what the current administration is able to do in terms of getting these multi-trillion-dollar rescue packages out, which means that there's just more money to be poured into the stock market. And that's all there is to it. And our bellwether instruments being the S&P showing a little bit less aggressive behavior, which is interesting. So yes, we've still got that cyclicity that looks pretty much the same, but not quite as keen to test that resistance level as the Dow. And that's even more the case here on the NASDAQ, which I like to keep an eye on. So this one, well, on the lower time frame, the shorter term time frames, everything looks similar, but the bigger picture, not quite so much. All right, folks. Well, that's pretty much it from me. I hope that, as always, these sessions give you real value. And if they do, I'd appreciate it if you just drop the word value into the comments below. And if you managed to benefit last week from that high quality price movement on particularly pairs like the Euro Yen and a few of those other yen pairs, then that is something we spoke about as needed to be looked at last week. And if you've taken advantage of that, you should have done pretty well. So if you have, then kindly do drop that into the comments below, or the instruments that you've got. And once again, if you're enjoying these sessions, then please do subscribe to our channel, hit that like button, and don't forget to set the notifications, as we are going to be bringing out a free training series on, in particular, advanced price action technical analysis over the coming weeks. And if you want to be a part of that, then again, do subscribe and hit that notifications bell. All right, folks, so that's it from me. I hope the week's trading is really great for you. If you do have any questions, pop them into the comments as well, and I'll get back to each one personally. All right, that's it from me. Bye for now.